Good evening, everyone. Welcome to Admiral Market session recap of 30th of December, 1 day, 2 days prior to New Year. Thank you very much for asking. I'm very good, Kalyan. Thank you. These last few days and especially this week, well, basically, I didn't do much. I'm waiting for the market resolution for this year. But it's, for me, I think this is at least obvious, I can say, what is happening on the markets, and I'm not surprised by these moves that we had last week. Well, to be honest, I only did a few scalps, few in there, of dollar CAD and euro dollar, few scalps of also of GBP, but nothing much, because I don't like to trade basically when we have a holiday season. So I didn't do much, but I'll be back full time, of course, after the new year. So at a very first day after the new year, probably around 2nd or 3rd January, I'll be posting full analysis again, of course. And for now, as it seems, it looks like we are very, very bullish, almost on each dollar cross, and I can show you some setups for possibly for maybe also a day after New Year. Remember though that tomorrow is the 31st of December, and tomorrow markets will be very, very volatile, I presume, and usually at the 31st of December there are some moves which can begin the profit taking, mark the beginning of profit taking from both long and short positions, so that can lead to some volatility shifts. Okay, so don't be very surprised what will happen tomorrow, and if we perceive a bigger move, don't let it surprise you, because that is normal, perfectly normal for 31st of December. Now, what can we say about our favorite currencies, and what can we say particularly about euro dollar? Let's see what happened last year. We can see on euro dollar, this is daily chart, and you can see that somewhere around here, let's say it was the level where euro start to fall heavily from 37.20 to 27.50. So we can see that that candle, it was basically the very first day of February. And if you see, we can now find a new year, last new year, it was 31st of December. You can see the 31st of December daily candle, not that big, but it was enough for the start of profit taking. So this was New Year, 31st of December, daily candle, and you can see the start of a huge profit taking that happened later at the very first day of this year. You can see that, so it was a fall of around about 250 pips. Why was that happening, guys? Now, you probably know that if you follow my analysis and webinars, you know that I am pretty realistic in expectations and analysis. And I can say this was the clearly profit taking for, let me zoom in, that was New Year. You can see consolidation into a rectangle. This is, well, we can say also this is, this is not just a rectangle. This is more than some sort of pennant, but it was basically a bullish pennant. You can see this is bullish pennant here. This is pole, and this is flag. So we can say this is very clearly, this is bullish pennant. But You know, some of our setups cannot be technically valid when we have profit-taking days, okay? So this was the profit-taking day. You can see this is the beginning of profit-taking. Then there was some slight correction and then a huge daily candle to the downside. And this was clearly bullish trend with profit-taking and with correction, of course, in the right direction after the profit taking. So this candle marks basically the end of profit taking, and then we had a swing. Of course, after the swing, we can start searching for retracement. If that will be the case for this new year, you know what you should do. Wait after the profit taking, then mark the first swing, and then of course around 56.1.8, 78.6, we can start looking for entries. So what happened last year on euro-dollar currencies? You can see the price. It was bullish pennant. This is pole. This is flag. Usually we can add the pole length to our profit. It's 415 pips. So up to here 415 pips, almost guys to the pip. You can see how good technical analysis is. This is pole. You add the length of the pole after the breakout. We can see the red level. So 450 pips, 15 pips were in play, and the price even went to 436 pips, marking the top. And of course, that all happened after the new year. So new year profit taking, then first swing, then retracement, and after the first swing we mark the retracement and we can enter the market. So that is how you deal with profit taking after the new year. For each currency pair it doesn't matter. If we spot a pattern, we wait for profit taking. After the profit taking, it doesn't matter, maybe it will be to the upside, but this year was to the downside. So the failure of pennant, but just a non-technical failure that was purposely done, because longs have closed their positions and it was automatic sell into the market. So first it was to the downside, selling, then correction. First swing to the upside, and after the first swing we go in trend direction, and this was clearly bullish trend. And today is also, last week, this month, it's all bullish. If you follow my analysis up to Christmas, you know that I've been, well, slightly bullish biased, and I advise you to buy into dips mostly on euro dollar, and it was really that we had some nice buy into dips mode, buying the dips. Okay. Now, as we can see here on the chart, this was basically the top after the new year. It was 37.10. Okay. And now, what can we say about it, guys? After the new year, there was a downtrend all the way to 2750. 2750, 2750, 2750, triple bottom, and that is the very, I can say this is the strongest level that bulls are protecting, and this is absolutely the strongest level for bulls, 2750. And this is, if that level breaks anywhere or anytime in next year, we can say that euro will be in a big downtrend and possibly test lower levels of 23, 22. But for now, as it seems, it doesn't look very possible. But let's see. We had basically a full month of uptrend after the new year, and then the drop started. Maybe we will have more or less the same situation, uptrend, and I'm counting now on continuation of uptrend. I will tell you that later. I will show you my setups for each of currency pairs. But For now, as it seems, we have a nice uptrend, and this uptrend will stay. Of course, when we day trade, we can trade in both directions, but generally speaking, we are in uptrend. As we can see also, what is very important, and many traders don't want to see that and just overlook that, this top has been broken and this top has been broken. So prior year top has been broken, even though the price has retraced after the break. We can still see that this daily candle is very, very strong, and also that top from the 1st of February, prior to this downtrend, it has been broken here. Also, it has been broken there. M pattern failed. At least it didn't fail, but it was just a slight little retracement to down boundary of this bullish triangle. So we can see that how the price perfectly matched bullish triangle flag of the last year, then possibly forming a new top into the new year. And this, as it seems, I would not be surprised if euro hits 39.50 till maybe tomorrow. I don't say that can happen, but if profit taking happens tomorrow, profit taking, I'm counting on long profit taking, that can spike up the price. But we will see what scenario will be. Anyway, I'll show you setups later, but from now on, this is very bullish. This is very bullish, and we should buy into dips, of course, especially because of this. This is upward triangle. This is not a wedge. This is not a wedge, because we are very, very close to the pinnacle, to the vortex, and wedges do not have vortex. So even though if we didn't have a new year, then I could say maybe this is a wedge, but because we have a new year tomorrow, the price will be in some form of profit taking, then I can say this is bullish triangle, and we should again buy into dips. And if we look at this level, if the price closes above the level, not the spikes, just it needs to close above 38.10, let's say 7 to 10, then we can see continuation again tomorrow. So euro, this year, the euro start was bullish, then it was bearish, then we had a correction, but it still was bearish until this top has been broken, 34 level has been broken, and after 34.50, this was a big uptrend with some, again, news-driven moments like this moment, but again it marked the beginning of lower boundary of bullish triangle. Okay, that was what was happening with euro dollar. After I finish with the yearly recap, we will come back to see possible setups for tomorrow and the day after tomorrow. What about GBP, our favorite? Well, to be honest, maybe my favorite pair of last month. Just look at this. Look at this. This is very, 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 well, I can say a much bigger range than euro. Just compare these charts. The cable is really strong currency pair. Look at this. This range was awesome. And how did it start? Let's see. Let's see, the 1st of December. The 31st of December goes here. 31st of December. Let's find out here. 30th of December, it was here, and this candle afterwards was not that big. So profit taking to the upside. This was profit taking to the upside. You can see a level to the upside, guys. To the upside, you can see the break that was a weekend. So after this we had profit taking to the upside, and later it was correction to the downside, because downside has started here, then we had some consolidation, and then we can see profit taking to the upside and continuation to the downside. So usually, as we can see, on New Year, price will mark the beginning of profit taking, and after the New Year, price will continue in the turning trend direction. Okay. So we will see, but we need to wait. We need to wait for that particular scenario to happen. After that, well, I can say that that was, because we are looking at daily charts, we can see some nice uptrend on 500 pips for GBP dollar, and then of course again correction after the price hit 62.65. It was nice correction of almost 1,000 pips to the downside, and then we can see the completely cable was, that is basically, even we cannot say that that was a downtrend. This was a downtrend, of course, but we can also see that cable generally is in uptrend, and we can see also if we draw a line here, let's see, it's not a perfect channel, but we can also say that this is a channel. You see, this is also some form of a upward channel. This is maybe more valid, and you can see that cable is perfectly following that price momentum. And after 48.75, which was really very low, that happened in July, we are in a big uptrend. And now you can see where the price is, 65.20, and it is on its way to 66.60, 66.65. That is the next target for cable. Very, very strong uptrend. What happened to Aussie? Aussie is, well, I can say, very much fundamentally driven currency. Being a commodity currency, it's really fundamentally driven. I can say that basically from, let's say this is December, we can see the December price that was the top 1, 2, 3, 4, 5, 6, 7, 8 touches of this level, 0.05, let's say that was 1.0579. We can say that was the top, that was the most important level for Aussie, and after that we are having a big profit taking to the downside and correction to the upside, small correction to the upside after Aussie continues to go down, and it should go down after the New Year. I think it's aiming for this level, 86, 86.34, and even lower. I can say that we might see even 85. From this perspective, we can say that Aussie was basically in a big downtrend since April, and is still continuing to be in downtrend on higher time frames. Especially after this top has been touched, you can see the fall, first swing, second swing, third swing, fourth swing, fifth. Now it's a fifth swing to the upside, so we can sell on rallies, of course. And what about Euro Yen? Of course, that was Bank of Japan child, and we can see that basically this, let's say that from this moment we can say from not this particular level, you can see a big hammer to the upside, and this is daily chart. You can see, let's see how many pips is this. This is 300 pips, guys, in a single day of retracement. That is the beginning of huge uptrend. Huge uptrend, one correction uptrend, second correction uptrend, third correction, but marking of a triple bottom, and you can see the huge price action to the upside, and it's still inclined to go to the upside, as we can see that this pair is being very strongly driven by the determination of Bank of Japan to further weaken the currency. So it's really a huge, I can say huge uptrend, okay? You can see also from these candles, as you know, these candles should be basically reversal candles, because they are spinning tops at important level to the upside. But you can see the continuation, because they knew that many traders would try to short it here, because technically speaking, it's the point for shorts, because we had a nice touch to the upside, and after that we have 2 days of consecutive spinning tops. Spinning top in uptrend is reversal candle, so this technically speaking should have gone to the downside, but they knew that many traders are having short positions and had short positions, and they spike the price. Look at this daily candle to the upside. Basically it's around about 200 pips. They spiked artificially, the price was spiked to the upside, marking the uptrend continuation. If this proceeded to go down, well, we wouldn't have the price here today. So it's really a strong uptrend. So for this uptrend to cease, we should wait for some news of Kuroda, Bank of Japan chief, okay? So we need to wait for some fundamentally driven news, not for just basically technical levels. Because if I made analysis here, I would say try to short it there. Technically speaking, anyone who shorted here was basically doing a good technical valid thing, but artificially the price was driven higher. If you shorted it here, as you can see, the price could have get you maximum of 65 pips. So basically, well, I know that traders who usually trade on daily, they want bigger movements, and this is what happens when prices artificially spike to the upside. So euro yen is in huge uptrend, and it's still in a huge uptrend. It should be until we hear some news from Bank of Japan, change of policy, okay? Now, what I have prepared for you, of course, prior to new setups, we can see a risk disclaimer. By accepting risk disclaimer, you are agreeing to proceed further with me and accepting all the risks associated to Forex market. Market plan, euro dollar, trend is bullish. We have daily bullish triangle, guys. We have daily bullish triangle. As I said, this is daily bullish triangle. Immediate support is 37.85. Daily support is 37.25. We should buy into retracement. Potential targets 38.95, 39.30. I don't see alternatives now because we are having a strong uptrend. What I would say is I would wait for this daily candle to finish, and then I will mark the retracement from the bottom to the top of this daily candle, and tomorrow I would wait for retracement if we have any retracement to the downside. Now, wait for daily candle to finish. After daily candle has been done with, you mark the retracement from the bottom to the top, from the left to the right, and then wait. Let's see that this is daily candle. This is just my projection. I don't know where the candle will close, but let's say if it closes around there. Now, just after this candle finishes, draw the retracement tool and wait for retracement to 56.78.6 if we get a strong momentum. Okay, try to enter in retracement tomorrow. That is my view if you will trade tomorrow. So potential targets 38.95, 39.30, and well, I'm not very bold enough to say that euro will touch this level 40, but surely it's in uptrend, and it looks like it's going to hit 39. Okay,
But just for any case, we don't buy it now, we wait for retracement after the daily candle closes. So I will show you again how we do it. Just mark the bottom. Let's say this is the top now. Mark the bottom and the top, okay? Bottom and the top, okay, and then wait for daily candle to retrace, next daily candle to retrace around 56.1.78.6, but of course the accent is at 37.85. If we see that, and up to 37.50, let's say, because below this level we won't see probably New Year's spike to the upside. But if candle stays this strong and retraces tomorrow, we can probably see 39, okay? If that happens, of course. For cable, trend is very bullish. We have equidistant up channel. Immediate support is at 65. Position buy towards 64.85 with a potential target 66.65. This is what I see on cable. So this is 64, 84, 85, I can say. We have a small candle there, but we also have a top there. We can see that the price is going to the upside. What I would like to see is just a retracement to the downside, then we can enter a buy position. And I think that judging from now what I see, cable is targeting 66.65, okay? 66.65, that is potential target. Now Aussie, we have a bull. Now we have, this is my mistake, because this is bearish trend. This is bearish trend with a correction, bullish correction going on, and that is basically retracement. So this is what I can see on. We can see potentially W pattern forming, but I would say sell around 85, 89, 50, 60, 25 pips trailing stop, 15 pips initial stop. Why the stop is so small? It's because we could have breakout pullback continuation at 89.70 targeting 90.00, 90.50 if that happens. Why do I see that? Because this is a level for shorts. That can be our first position to sell around there to the downside, but if the price spikes to the upside, then makes pullback and continuation, that will be a signal for the price to try to test 90.50. So this is why I see it small stop. There is not a big risk. Technically valid, sell around 89, 50, 60, 25 pips. Trailing stop, 15 pip, initial stop. Okay? Or alternatively, if we see a big spike to the upside, then we buy a breakout pullback continuation at 89. At 89, let me show you, 89.70. This is breakout pullback continuation if that happens, but I am counting that the price will come here and then proceed to go down, because we are still in, even though the candle is bullish, as today is obviously it's risk on mode, dollar is suffering, so we can see that this candle has the potential to withdraw from these levels, because we are like here, you see it here, one top, double top. Now it can form again double top around there in that zone and proceed to go further down, okay? And next setup is Euro Yen. I would go, of course, because we have bullish pennant, but I would go with counter trend sell around this level 14.55, or let's say it's easier 145.50 to 145.60, 20 pips trailing stop. There is again counter trend position, because you see the price is going to the upside. This is flag, this is, sorry, pennant, this is pole, this is flag, so we have again pennant, but because the price is bullish now and it will proceed to be bullish, I would like to open a low risk sell trade there, because the stop isn't that much, because we have only 20 pip of stop loss, and if sell get in, we can have potentially 1 to 2, 1 to 3 risk to reward ratio, okay? Or alternatively, I would of course wait for retracement around 144.60, targeting 145.50, but only on retracement if we see it to the downside. Okay, so this is my view for these holiday setups. I will go through slides again. Holiday setups. If you have any further question, you can ask me. So Euro Yen, strong uptrend, no retracement. I would like to see counter trend trade around there, because also when we were in uptrend, we had a counter trend here, and we were good at least for, well, maximum 80 pips, of course. But I can say that, well, to be honest, guys, counter trends can be turned into positional trades only after some 30 to 50 points of profit. So if you want to turn it into a positional trade, then of course use your trailing stop, but don't set it at 20, set it after 30 pips, and I would usually cash at least a bit of it and put my stop to break even after the target has been reached. Okay, once again I will go through these slides. If you have any questions, ask me, so I can explain again. You can see market plan for euro. What is the trailing stop that you use? Fixed steps or continuous trailing stop on NT4? Good question. If I make in intraday positional trades, I will usually make trailing stop after, let's say, 10 to 15 pips. It depends on currency pair. But there are two types of trailing stops I use. If I make it after 10 pips, let's say I would use a trailing stop of break even plus 1. So if the price stops me out, I would at least be good for that commission which I paid for. But if I make 15 pips of profit and the price proceeds to go further, I put my trailing stop to 15 pips, and then I subsequently move my trailing stop after 10 pips, so 15, 25, 35, and so on. But I still need, I will make probably I will talk with my programmer, and I will tell him to make me trailing stop robot, expert advisor, and I will because I need to make adjustments. Not each single pair can be trailed the same. And after he makes me that expert advisor, I will share it with you, of course, in one of my next webinars, so you can use it too. It's not very expensive because he works for me from time to time, and I think that this one which he makes me will be very simple for him, because I will say to him what he should program it like. But that is the answer to a question. After 10 pips, I usually make a break even plus 1 stop. After 15 pips, I make it will be great if I get it, and when I get it, I will share with you. No problem. So after 15 pips, I make my break, not break even, but I make my stop to plus 15. So let's see it on this example. If I am plus 10 in profit, okay, and the price here, it reached plus 10, and then it started to retrace. I would put my stop to break even plus 1. So I would be good for that commission I paid for. And this is second example. If price is plus 15, now I'm talking mostly about euro dollar. It's a bit different situation on cable. On cable, this is plus 12 and this is plus
anywhere from plus 15 to plus 20. So if the price gets to plus 15, okay, and then proceeds to go further, I would make my stop here. So I would secure that 15 pips, and I would go with plus 10 increments. So after 20 pips, I would go with 25. After, if it reaches to 25, I would go with 35. But possibly I will make some adjustments because, to be honest, these last few days I had maybe 4 or 5 scalps, and I wanted to turn those scalp trades into swing scalp trades for that day. Let's say I wanted to make some 35, 40, let's say 35 pips maximum from those trades. And what happened is the price usually reaches this 10, 15, and then hit my stop loss. I got those 10 and 15 pips from trades, but then it goes and hit my target price. So I will make some adjustments, and probably I will, in subsequent work, I would wait for plus 15, and then I will make it to break even plus 1. But I will do experiments on that, and when I finish that, of course, I will share with you what I have to say. The thing is, you will be, with this kind of trading, you are mostly profitable. So let's say that you are probably will have 70-30 win to loss, sometimes even 80-20. But the thing is, usually the risk is from 15 to 35 pips. And if the price gets you, well, let's say 2 times to your trailing stop, then next single trade which is in loss will nullify your potential profits. But that is the market. I will do those trading. I will try to optimize that expert advisor robot for each currency pair, so I don't have to do it manually. But let's say that from time to time, when I do with trailing stops, I do it like I explained. I am mostly profitable with those kind of trailing stops, but to be honest, I just don't like when I see that the price hit my 60 pip target and I was stopped out after 15 pips. But that is the market. Sometimes it will happen, sometimes it won't happen, but at least we can get from those setups some locked-in profits. And I will do, of course, I will do everything to optimize trailing stop money management. Okay. Other thing is, of course, when I don't use trailing stops. But you know, when market is very volatile, I like to use trailing stops, especially around those holiday seasons and so on. I just don't want to risk much, and I want to lock in my profits. Okay. This is then for GBP dollar 65 and buy towards 64.85 with potential target. And I still think that this will be hit. Of course, guys, I still think this will be hit. Now, I don't say that that will be hit after the new year, but for me, it looks like ultimately this is now the next big target for GBP. It looks like it, and we want to buy into retracement. Now, if you have bought it today, I advise strongly to stay in a trade, because this level now is immediate. Of course, this is immediate support, but this is also very big support, 64.85, and well, this is potentially the target. On Aussie, we have basically bearish trend with the correction going on, and as I said, sell around 89.50, 60, 25 pip trailing stop, 15 pips initial stop. Why 15 pips? Because if the price goes in strong momentum, it breaches 89.70, then we want to see breakout, pullback, continuation to the upside. So breakout,
pullback and then continuation to the upside. If we see that, this will be targets. 90.00, 90.50. Breakout, pullback, continuation. But the first thing is I want to see this level, and then we can try to make short trade with 15 pips stop, 25 pips trailing stop. And euro yen only counter trend sell with 20 pips stop loss and 20 pips trailing stop. And position buy around 14.46 on retracement targeting this level. Darshan, I can see that you extensively trade GBP Aussie. I will now I don't have those levels calculated for that currency pair, but let's see from pure from pure naked view I can see. Well, I can say this is very bullish. This is very, very bullish price action. This was double top and the price has breached double top. Darshan, I would like to see this daily candle close. I would like to see this daily candle close, because if this candle closes again above this level, this is, to be precise, 85.55. So this is 85.55. 85.55. Okay, if this candle closes above 85.55, that will be a signal for continuation. Continuation if the candle closes there. This is historically big level. You can see that the next target is here. This is 88.61. 88.61. So if this candle, let's see, 61, 88.61. So if this level closes, if this candle closes here above this level, that will be a sign for you to go into a long trade, possibly adding after this candle has been breached to this level. So from now, my view is bullish, of course. Very bullish. This pair has been very bullish. And we can also insert equidistant channel here, which is a bit of steep, but yet again it gives me, let's see, now I need to move the line. So this is perfectly, you see, this level 88.60 will mark a potentially top for this move, but of course with more bullish bias if it breaches. But because we have expanding triangle there, if it goes there, and you can see the space in between, so very big space to the upside. I wouldn't short it blindly, or if you have shorted it, you can see that the trend line of equidistant channel now will be retested very, very soon. So I don't know how long you should stay in the trade if you went short, okay? Okay, you can see the price, and this is bullish. So wait for daily candle to close 85.55. It's see, if it closes around there or above there, you can try to place a long trade, but this is bullish to me, very bullish, with potential for a further, especially because GBP is going north, and Aussie, as we can see, is very close to resistance, so it can easily turn from this resistance to downside,
and GBP has potential to go further up, so that will be possibly continuation of longs for GBP Aussie. Okay, so you need, when you spot those cross pairs, you always need to watch single currency pairs, GBP and Aussie. Okay, so that was it, guys. Now, thanks to Darshan, you had one more pair to watch for, GBP Aussie. Thank you. And you also, Darshan, have a great New Year. And thank you, of course. After New Year, we will be back with setups. You can write which currency pair you would like to see, so I can expand these session recaps further, okay? Now, guys, you saw all of those setups. Now I want to wish you very, USD CAD, no problem. I can do also USD CAD. Write it down, and I will do that. Scalp tables, of course. Scalp tables will be I will be giving scalp tables, but now I don't trade until New Year, so you will have those scalp tables after the New Year. So that will be for sure. Of course, thank you also for attending webinars of this year, and I can say that next year will give us, again, many good webinars. I will show you guys. That will be a set for new strategies for you, and I will show you which kind of webinars I will do. I think that those are posted, but especially go with momentum in Forex trading, and this is Introduction to Chaos Theory, Basic Chaos System. I will provide chaos overview and system give up, and also we will be doing Introduction to Harmonic Patterns, and I will start with Price Action Trading 1 Pattern System Presentation. So with this Price Action Trading, I will start a new series for Price Action Trading. Thank you very much, and I wish you all to be very profitable, and thank you all for nice and good wishes, and I wish you good health. May God bless you all in New Year, and I will be back after New Year with new setups, new level tables, and new webinars. Thank you, guys. Thank you, girls, traders. Wish you happy New Year, and don't get too drunk. You need to trade after the New Year, okay? Yeah. Okay. Thank you very much. See you very soon, guys. Goodbye, and wish you very happy New Year. Bye.